But to make an investment decision every day is forming poor habits. It's forcing you to make decisions on very limited information.
What would it mean for normal investors to have the grit of a Rafa Nadal in their own approach to investing? Like, how different would their returns look 20 years later?
Well, you've got this cash and you want to, do something with it. Maybe you want to buy a house with it. Well, this is why KYC exists, to understand the flow of the money, because you're trying to stop crime.
You're not a dummy at the table, right? You're doing this because you're seeing something that that you need, basically, if you want to talk about it purely economically.
For an advertising-free version of this show, check out wallstreetwildlife.com.
Welcome to the Deep Investing Jungle with your hosts, a weary Luke the Badger Hallard and a bright, fresh-faced Krzysztof the Monkey Pikarski. This week on the show, we're continuing the King of the Jungle portfolio review with Monkey's deepish dive into IREN, with a side note about what it really means to know a company, plus how to invest in SpaceX pre-IPO, and some hot off the press chat about Wise PLC's anti-money laundering failure. Serious issue. Stock was down 18% at one point today. Plus, Krzysztof's going to give us an update on his monkey versus Samantha the rabbit experiment.
Badge, how you doing, buddy?
Yeah, I've been better. I've been better.
You look as beautiful as always.
Very kind. You're gracious.
That's the most important thing. Yeah.
Yeah.
So I promised you I would make up for your dip in energy by providing the entertainment this week.
Super. And you bring the entertainment every week.
So first things first, I'm sitting here in my new donkey house in Sicily with a fresh new interwebs connection.
Look at you. You got two houses. They've both got fiber optic. Superb.
In the middle of kind of nowhere. So this is a great accomplishment. I did something fabulous last night, and I'm curious if you did this too. I watched the new documentary on Netflix about Rafael Nadal. Have you seen this?
I've not, no.
Okay. We're both tennis fans, yes?
Yeah, for real. Yeah.
Yeah. You saw him play, if I'm not mistaken?
Nadal. Yeah, quite a few years ago. I think we've caught him in like a preliminary match at Wimbledon. Yeah.
Okay, right on. I saw him play at the US Open. Anyway, the whole it's a 4-episode documentary, and it's mostly thematically about the absolutely insane amount of stress he put on his body through his 20-year career, I believe. Was it 20 years? Many years, whatever the number, right? And 22 Grand Slam championships. And so really it is about, there's this wonderful quote. I think the quote of the whole documentary was that many times he put himself through this immense suffering in order to overcome the suffering. Like that there's it's a way to live in some sense, trying to overcome your own limitations. I mean, the great athletes do that, right? And then at some point, he realized that there was no longer any point to the suffering. He was no longer overcoming anything. Anyway, glorious documentary, like really at some points makes you really think a lot about your own limits and like watching what he did. Like did you know he played his almost entire career with a massive foot injury because his bones were not quite right?
Like I knew that was like apparent in the last couple of years of his career, but I didn't know it's something he always wrangled with.
The whole time, right? The whole time since he was, anyway. So I'm deeply moved by this documentary. I was a huge fan for such a long time. But I was making the connection to investing. I always try to do this. I don't know if this is too much of a stretch. He willed himself through these massive dips in his career where at one point he's the best, and then at the next point he can't even walk. And then he's the best again in the world, and then he can't even move his knee and so forth. But the number of times he went, repeated the cycle is astonishing. My sense for investors is that the greatest error, I'm being a little hyperbolic, but maybe, is that as soon as things get hard, right, and the market turns, most retail investors throw in the towel and say, nah, some version of, we've talked about this so many times, I was either lied to, or this won't work, or it's too painful for me to see. And then, and then they sell and then invest at the wrong, at the highs, and the cycle continues. But I thought, what would it mean for normal investors to have the grit of a Rafa Nadal in their own approach to investing? How different would their returns look 20 years later?
We actually saw this recently, I think. Even if we look at our own as finance creators, like YouTubers, we always joked with each other kind of grimly that when the market started going down, that's when we knew our subscribers and the engagement would drop off, because then it's no longer easy mode, right? It's so easy to invest right now because everything goes up. And if anytime someone contacts me, one of my best friends contacted me last night, and she was like, Luke, what do I do with my Rocket Lab position? Shit, I've made so much money. And I'm getting those conversations all the time, specifically about that one stock, because that's the stock du jour for anyone who's been in my circle for the last couple of years. And even if we just wind the clock back, 2 or 3 months ago, there was a brief period where it looked like the market was going to go down. And it did, give back some of the gains for, 2 months maybe, before things went psycho yet again. And that happened. Our engagement dropped off a cliff. Even a bunch of our Patreons, unfortunately, cancelled their patronage. So yeah, this is the reason we're doing what we're doing, are for the bad times, not for the good times. And that's it's easy right now, but one day it will, for a protracted period, it will not be easy, and we'll find ourselves with the Rafa serious injury that we're going to have to carry for years. And that's when you're going to want.
Right. And how many of our audience will know this in advance and be willing to show up, badly bruised and damaged and in all kinds of existential doubts, and say to themselves, this is the thing I want to overcome. Not the money part, but this retraction and almost fear and doubt about your own. So yeah, it's easy, grit. This word grit has a certain cachet in corporate circles, but on the humane level, when you see it and that it could be cultivated to, in some cases, exceptional degrees, then I'm for our listeners, I want them to think about this. Where's your own grit? What's your own grit level?
How do you develop that as a skill, other than just living through those periods?
Well, I think as with what I saw with Rafa, I feel like I have a huge, not huge, I have a spiritual connection. I guess we like the people we like for some reasons. And that's because he generally likes doing difficult things. And I find that true when I step back in my own life, my practices, my actual practices as an athlete, as a martial artist, as a Zen practitioner. Investing ain't no joke if you've been doing it for a very long time. So to me, it's not a hard question. What happens when you do difficult things repeatedly? You get a little bit, you get a little bit more comfortable with difficulty.
We share a YouTube account, which is the Wall Street Wildlife account. So I'm often I try and use my personal YouTube to watch personal stuff, but you seem to use our one to just watch all the garbage you watch. But we're seeing interesting jiu-jitsu and other kind of martial arts content on there. And some of it does quite interest me. Clearly, you're a man who likes pain.
I'm not sure I like pain. I just see the reason why it's a good ingredient in one's diet, especially as an investor. So, speaking of pain, I ran a poll on our Patreon, as you know, asking our audience how many of them would like to see me run a contest.
I'm going to call you out even here, right? So you're talking about this, because just on this point, because it made me roll my eyes so hard, and I was somewhat well at that point. I can't summon the emotions now. This is you and I had a conversation like 2 episodes ago where you pitched the idea of the monkey versus Samantha contest. And I pushed back a little bit hard on making it like a core part of the Patreon. And so then you thought you'd do a poll. And okay, that was cool. Your poll was so stacked and rigged. It served no democratic purpose. But anyway, let's just reframe your intro. You did a poll pantomime to justify the thing you intended to do anyway, which was, now carry on.
I think the poll, the way I intended it was I have this experiment that I'm trying to run, but I generally think of it as an experiment and I don't know what's going to happen. And then all the other choices were like, for God's sakes, don't do that. Stop it. Like, you don't even know what you're talking about. To me, the data point that was fascinating that came back was that almost everybody said, no, we'd like to see whatever it is the hell that you think you're doing and talking about. So anyway, I went on ahead with it, and we're a week in, and I'm here to tell you, Badge, that I still have no idea what I'm doing, and I still have no idea what exactly this is and how exactly it's going to provide anything valuable. But I have a couple of hints after week 1. So for those who aren't caught up in this, essentially what I tried to do was begin to create an AI model whose first and fundamental task is to catch any errors and hallucinations. That's kind of the primary motive. Basically a bunch of filters. Then from that, in order to make that piece interesting, I turned it into a little bit of a competition where every day the AI will pick a stock out of a predetermined ecosystem, and then I too will pick a stock based on my own knowledge, not just from the AI selections, but from my own, and then $5 every day on each side, and just collect data day after day after day, just see what, if anything, shows up. So far, it does show that both Samantha and I are now losing to the index by a tiny bit, but I am beating the AI by 1.4 percentage points in such a short time frame, obviously irrelevant. However, here's what's interesting so far is that another bit of my thinking around this badge was, what would happen if I would force myself to buy something every single day? So this is more about like a habit formation, and it's not obviously how any serious investor does things, but like what if just every day kind of like by buckets, like by drops, you add a little to the bucket, right? I wonder ahead of time, now that the habit is like starting to take root, tiny little bit, whether if I, sort of like your Duolingo streak of however many insane days consecutively, at some point you just do it because that's just what you do. $5 a day, or even $10 a day from both sides, were I to continue this on its own, is sort of worth wondering about. Because that's going to be about 22 days per month. That's $200 per month, somehow. It kind of forces me to, instead of buy a cup of coffee, I buy a cup of stock. That itself maybe has some value.
I mean, I'm going to give you the Badger take on it, which is it's establishing a habit for sure, but I think a bad habit in a couple of ways. Like it's definitely a good thing to be investing money every day, but to make an investment decision every day, I think is forming poor habits. It's forcing you to make decisions on very limited information. It's forcing you to you invest arbitrarily just because you have to invest today without enough knowledge. And it's probably forcing you to do things that you wouldn't normally do. And I think these are all quite bad habits to have as an investor. But if you were to put like, a good habit would be to put $10 a day into the investment account and then every once a month, do your research and then buy a well-researched company every month. I think that would be a really good habit.
Well, so this is where I'm still calling this an experiment. Everything you just said is what we do and model with the King of the Jungle portfolio. So that is our established base. I think I think I disagree with you, not because what you said is wrong, but because we already do what you were talking about. So I'm more curious about to what extent are these small amounts in one way somehow better than no amount at all? That could be one way of framing it. I mean, the numbers, we'll see. We'll see what the numbers show, let's say 6 months in compared to the index or whatever.
Yeah, sorry, but just to clarify my pushback, I've got no concern with like daily investment of money, but I do have a problem with having to make a new investment decision every day, because at least in my world, you can't make a good quality investment decision every day. Like it doesn't exist. What was true yesterday will be true today and true probably for the next 30 days.
So there's a little bit of a fork in the path here. The AI is obviously Samantha is picking from whatever the algorithm is using as I refine it. On my end, I'm actually mostly drawing from my already built up base of decades. And so, for example, the first 5 stocks I picked, I think 3 of them were just stuff I already researched, and it's just like, I have $5 in my pocket. So I wouldn't call it a new investment decision. It was more like, a cup of coffee. Okay. But moving on, the other thing I noticed, and it's still so early, is that I have in fact been put face to face and had to read summaries of companies that I did not know anything about. And I kind of see this a little bit like the way athletes just doing certain reps, that over time, my knowledge base will compound. And at some point, it's like some version of, if I'm ignorant of a company existing at all, I obviously can't possibly act on it. But somehow, somewhere over these months, having had exposure to X, Y, and Z that I would not have otherwise, might make it easier to take the next step and the next step and the next step. And I'm curious to see if that kind of compounding rate will in fact turn into something worth paying more attention to. The last thing I want to say is I am watching closely whether the AI is actually learning. Like the AIs now have more memory, and I created a database on which to check against previous calls. And I want to see if the sort of memory bank gets a little more sophisticated going forward, as opposed to, starting from scratch each and every time. So anyway, for now, the experiment continues. I'm having a little fun designing the parameters, but it's very much an experiment. And I take your pushback points.
I think it is cool, like a fun experiment. I'm definitely glad you're doing it because we're getting some really good content for the Patreon. And it's like use of AI and technology in stock picking is not new. But what you're not doing, it's not like algorithmic trading that you're doing here and, trying to do like technical trading, which is probably predominantly where these tools are used. What you're doing here is you're trying to, I think, augment the way we do stock research, understanding a company, what it does, competitive landscape, and then, the beauty of like having markdown, like rules and skills that develop is they're actually human readable. Like we've got Beaver, who's got a whole bunch of skill that he's developed now. And sometimes I go in there and I just kind of read the skill, and it's written in English. It's like instructions to itself, and I can read it and I can go, oh, that's pretty cool. Like it's kind of learned this, and I can tweak some stuff. Like occasionally I might edit a skill manually, and so yeah, like if you're recursively self-improving, Samantha Rabbit stock picker is learning how to pick stocks in a way that somewhat mirrors your own style. You can probably, a bit like AlphaGo, the human and the machine can now like evolve in partnership.
Yeah, and I'll reveal this. This shouldn't be in any sense hidden, but we did have a Patreon asked about the model I'm using and so forth. I think right now that part doesn't really matter so much because I'm changing things all the time. But I am interested in the fact that one of the things I know Samantha does better than me automatically is she's going through the actual official filings that live in the databases, including, say, insider buying and selling. So for my ecosystem of companies, call it around 300, that I have some familiarity with, there's no way in hell on any day that I'm going to parse through all these filings. So she's already doing some filtering work like, oh, company X, insider bought a lot. That kind of bumps that company up higher on the watch list and take it from there. So I'm kind of, I remain intrigued. Last note I'll say about this badge is in the end, I have the sign off. Like in the end, I get the picks in front of me and I say yes or no. So I remain in control all the time, which is by design. But I am curious that so far her first 5 picks have been all what I would call stellar, genuine, good investments in this moment, namely Nectar Therapeutics, Cloudflare, Google, ASTS, and AAOI, which is a photo integration company. So she started out by going for quality over rando stuff. So I'm happy with that.
Good. Well, I recognize more of the Samantha picks than the monkey picks. So
yeah, good. So anyway, weekend jury is very much still out, but if you're listening to this and you don't know what the heck I'm talking about, on our Patreons on the Dolphin tier, I created a brand new channel where every day I send a link that shows you the menu of choices, a summary of the company, the current portfolios and the results and so forth, and you could kind of go along for the ride as an observer. All right, enough of that craziness badge. Why don't you tell us a little bit about some other kind of craziness that you've been promising, having to do with the space industry?
Yeah, I learned last week you can buy SpaceX pre-IPO right now, and it's on an absolute charge up like 4x in the last week. So like jump on board SpaceX. Here's the ticker. You can see the graphic from Fiscal AI. Buy it now.
You're being funny somehow.
There's some crayons on this, right? So the ticker is SPCE, which, if you know your space history, is actually Virgin Galactic Holdings and nothing to do with SpaceX or whatsoever. I was being ironic. Something interesting is happening.
I knew you were trying to trick humble. I already had my gadget out ready to put.
Something interesting is happening here, though, and it's more than people being dumb and buying the wrong ticker. So about 10 days ago on Reddit, someone posted just a reminder about when Zoom, like the communications company, IPO'd under the ticker ZM, a different company with the ticker ZOOM, like blew up and 18x'd in a couple of days. And it was like a microcap. The ticker Zoom was a microcap. But basically because like retail investors not paying attention wanted to jump into the hot stock, just literally like searched for the ticker, found it and chucked some money in. So there's no reason other than pure stupidity, like mass scale stupidity, that stuff like this happens, but it does happen. So this is a bit more subtle because the same thing may well happen when SpaceX, which is due to IPO in about 2 weeks' time, I think on the 12th of June, under the ticker SPCX. The same thing will probably happen on IPO day, maybe for a couple of days, where some people, tiny fraction, but only takes a tiny fraction, will buy SPCE, Virgin Galactic, in error, thinking they're actually buying SpaceX. But the price has racked up so fast because Wall Street bets and, the meme crew are on there. They're on like the social forums, kind of pumping this joke, and it's kind of tongue-in-cheek. To some extent, they're sort of pumping it the way I did at the opening of this segment, knowing that it's kind of a joke and it's a meme, but they're making legit money from it. And I think this is going to turn into like, a crypto pump and dump type scheme where kind of all the players, nobody's a dummy. Everybody, when they get into a pump and dump scheme, they know that the last guy out the door is the one left holding the bag and loses all the money. But there's still money to be made on the way up. But in the end, it's very hard to time your way out of that trade and sell at a profit. And in the end, what really happens is, a few insiders make a ton of cash and everybody else loses cash. This is like public market stuff, so there won't be the same shenanigans, but it's going to be like a waiting game where really it's like the meme crew making money from each other right now in anticipation of being able to make money from retail, like the 1% who make an error, whatever it might be, on the 12th of June. And I don't know, like I read the first thing and I was quite tempted to jump on board this myself, but standing back from it, I'm like, no, this is such a mess. I'm just don't have the skill set to juggle like a hot potato like this, so I'm not going to get involved. But plus, is it ethical? I don't know, but put that aside. Anyway, what do you think?
Yeah, casinos exist for a reason. Some fools make good money. I'd say it's all fine and good if you want to have some fun, as long as you label it, going to the casino, it's musical chairs really, / some financial Russian roulette kind of thing. The only thing I thought investing wise as you were talking is if I were to attempt this game myself, it would be buying puts and just trying to figure out when the whole circus would pop and whether the put is too expensive or not. Otherwise, the only other thing I have to say, Badge, is it's kind of shocking that some innocent people get taken in by this. I'm sorry, not shocking. Semi-tragic. Who goes to a casino? I guess in the casino, there are people that think they could win, even though, or could.
Someone who gets their stock picks in like a bar from the guy sitting next to them is the kind of person, they're not a serious investor. They're just they treat it like, spinning the wheel at the roulette table. They don't have the time or the energy to actually understand the stock market. And that's fine, that actually is the majority of people. But there's a better route for that majority of people, like it's passive index trackers and, long-term investments. If they want to do something crazy, sadly, hundreds of millions of active investors in the world, it only takes a tiny proportion of that number to make this error. And, you create this like exploitable event. It is just kind of the nature of things.
I don't know what else to say other than I guess even in casinos, like there's people that are drawn to the slots and they're like, cool, this is a certain kind of drug for me. And then there are more professional people who, study a certain complex game, like let's say poker or even blackjack to a certain extent. And then there's, it's just wild to me that the amounts of money that the manias could lead to is like as high as it is. But then again, we have like all the bubbles and manias across history. I guess humanity can't help itself. right? So I don't know. I'm very curious to see how the SpaceX IPO stuff will shape up.
I was joking with my investing family about making that bet like 10 days ago, but I'm just not going to go there. It's too murky. Yeah.
All right. Well, maybe Samantha will.
Yeah. Sure. Just, plan your exit cleverly. You're
Yes.
smarter than me to do stuff like that.
All right, Badge. Shall we get to the things of great substance? I want to tell our listenership about my top holding in the King of the Jungle portfolio. That is IREN. But first, a little bit of a meta commentary as I was preparing this deeper-ish dive. This has to do with how one gets to know a company over time and how important that is. So I can't quite remember when I discovered IREN, but I believe now it's over 2 years ago. And so if we take a step back, a lot happens in 2 years or 3 years or whatever it was. I mean, the number of quarterly earnings calls that I've now listened to, the number of investor presentations that I've seen, the number of tweets on X that I've read, that stuff all adds up, right? And so when, especially a company becomes your number one, in the case of the King of the Jungle, that confidence built over time matters a lot, a tremendous amount, because I have a lot of, foundation built underneath it, right? We talk about this all the time. I'm not going to get scared out of a position very easily, or I'll only sell when there's outright good reason for it and so forth. But it takes time. Here's what I thought was interesting. I think I told you in passing that yesterday I spent about 6 hours reading about IREN's last earnings call. So what struck me, before I get into the details, is that this is a company I already know very well. And all of a sudden, I found myself reading about one earnings call for 6 hours. Like, in other words, in one way, I'm saying my understanding of this company is probably deeper than the vast majority of investors. I'm not talking about the people who there's some people who spend hundreds, like all the time. I'm not talking about the 0.1%. I'm saying in general, right? I know a lot, but it also struck me how that base that I built over 2 years magnifies my ability to understand something that just happened in the last quarter. That it's almost like this feeling of not being satiated because all the details become much more crisp. And there's so much more that I could understand quickly and make sense of, that just a flyover and reading a quick summary of earnings could not possibly allow me to do. So, quick shout out, by the way, there's an investor in IREN, goes by Agrippa Investments. He's a guy that's been one of the pillars on the X community for years now. And it was his deep dive on Substack that I read, which had it was a 28,000 word document on just the last earnings call. I mean, a really, really shout out to the quality of Agrippa's investing and analytical skills. So just want to name that. If you're not following him on Substack and are an IREN owner investor, can't recommend it enough. So, Badge, you ready for the question and answer? Should investors invest in IREN today? First of all, 18 months ago, this company, you would have found it under the category of Bitcoin miner with delusions of grandeur to become something else. Today, it really does have a chance to become one of the biggest cloud providers on the planet. IREN is the ticker. It started as an Australian Bitcoin miner. The whole thesis was cheap renewable power, right? You build the data centers, renewable data sources, you become better, more efficient at mining the Bitcoin, therefore higher profits. In the early days, what you would hear from the earnings call was the hashtag rate and the hash rate and just how powerful their Bitcoin rigs have becoming. It's slowly morphed into this giant of AI data centers. It, as of January, is powering 2.9 gigawatts of power, 5 gigawatts by May. So approximating the hyperscaler class. Now, what happened in these last earnings call? Basically, a major thesis shift potentially is that NVIDIA itself signed on to have access to the whole 5 gigawatt footprint. The big eye-opening deal was that there was $3.4 billion that NVIDIA is investing to run cloud for NVIDIA's own workloads. Secondly, one of the flagship data centers that IREN is building, called Sweetwater, is going to be the foundation for NVIDIA's next generation design architecture. So that basically NVIDIA said, we want that. We want to build on top of IREN. The last thing that came out in this last earnings report, well, one of the main things is that NVIDIA also bought a new company or an old company called Mirantis for about 650 million in shares of IREN. This is going to be a software layer stacked on top of the pure, call it hardware. And so the bull case, basically in one breath, is that everyone was obsessed over the software moats, whereas IREN has the thing that is literally the bottleneck. It has the power, the land, and is building at massive scale, right? That's what you can't catch up, right? It'll take you years. When you add on top this new software stack that IREN just engulfed, when NVIDIA basically saw this, it basically said, this is the horse we're going to back to the tune of massive amounts of money. So, you know what my takeaway from this badge, and this is slightly ironic given our conversation with Bear and Drowsy the other day, is I legitimately think I am now an owner of NVIDIA again, but I'm doing it sort of indirectly by having shares in IREN, because these two are now conjoined in a way that is really at the hip to massive amounts of money. So that's the overview. Next question is, should you really invest in IREN? And I'm going to take you through these bullet points in greater depth.
Should I jump in with a couple of initial thoughts? Like, I'm glad you put me onto this one. You put me onto it, I know, like a year ago. So I've also been an investor, but I don't, I know 1% of what you do in terms of understanding the company. I actually now have almost a category in my own investment spreadsheet of, like, Krzysztof is really the guy on this. So I kind of accept that the trust I put in you, sometimes with some of my stocks in the real portfolio, that we're now, in our relationship is now so deep. I used to only do like meme stuff with options in my fund portfolio, and sometimes doing the opposite of what you said. Now I do have a couple of things I actually do. When Krzysztof says does something, I actually do them.
Famous last words badge.
Yeah.
And your tombstone, it will say, but Monkey said.
Yeah, exactly. Yeah. And let's contextualize the 5 gigawatts, because this is still like a tiny little company compared to like the actual hyperscalers, like the Googles and the Amazons and the Microsofts and Cloudflare. But
about 40 billion, right? About 40 billion. Yeah. So, I mean, certainly not tiny, but relative to the behemoths.
Yeah. But the whole world has like 140 gigawatts, 140. And so, yeah, like these guys have 5 gigawatts out of that. That's quite a substantial proportion. Like I kind of agree with you that they're becoming a serious player. I don't know that this would be like.
So, important point here, and actually this is. I do have a presentation, by the way, that's more deep dive-ish, which I am going to cover some of this. But here's one interesting nuance. I imagine that the source of the cumulative wattage available is sort of like just literally adding up all sites like a basic math equation. However, it turns out that when you generally want to start a big project, like let's say what Anthropic wants to do, what OpenAI wants to do, what Google's doing, you do not want to take part in anything basically under 300 megawatts or maybe 500, 300, depending. And so there's really not that many of sites that are big enough that would merit the attention of anybody besides these small little mom and pop shops. So the cumulative numbers basically don't tell you the whole truth.
Yeah, that's it. But if anything, that's a more of a positive for their, small but significant minority ownership of the sort of market share of total data center capacity today. But I was going to challenge your idea that this is like owning NVIDIA, years ago. I get that now they are sort of intrinsically tied to NVIDIA's growth. But it's not like IREN is going to do like 1,000x return and 1,000x growth. Like IREN's demand for data center capacity will be driven by, actually delivered and serviced by NVIDIA as they provide like the servers to go in the data centers and then buy back the capacity. So if NVIDIA like doubles over the next year, then IREN would double over the next year as well. Do you know what I mean? It will kind of move. It's like a smaller version of a thing. But if you just think about that relationship, would now move broadly in lockstep with NVIDIA, not be like NVIDIA, like trying to say that you're going to get in to something super early.
Right. I don't think I said that, but if that was the implication, I certainly don't mean that. The stock had already run up. The valuation is already lofty-ish. So, right. And NVIDIA, I think, was one of the greatest black swan-ish, like hockey stick moves of all time. So, yeah, I'm not saying that. What I am trying to say is the extent to which NVIDIA deliberately has now pitched their fate to and with IREN makes me feel as though I am investing also in NVIDIA again, because both of these companies now, if one succeeds, the other succeeds more. So it's just a weird, I think timing-wise, an interesting moment where I sold NVIDIA because of the law of large numbers, but here I am. My fate as an IREN shareholder is again tied to, in many ways, as you'll hear in a second, NVIDIA's performance, literally. And that has to do with the warrant deal, which I'll unpack in a second. But it's kind of like a joint venture, really. Like you kind of, my takeaway is that I kind of feel good, like having NVIDIA back in on my plate again. So, do you want to hear the details?
Yeah, let me just because you portray it as this, partnership of equals. Certainly not the case, right?
So let me unpack it. I think I need to unpack it, and then we could, because I have this all queued up, and there's a lot of moving pieces. Let me do a little bit of a deep dive here, and then you ask questions. So first of all, everything that's changed kind of happened in approximately 1 month, the past month. First thing that happened is that IREN went from predominantly being what's called a bare metal host to, they're just providing the literal computing infrastructure, to now being much closer to a full stack AI cloud. That's one major change. It also, so how did it do this? In part, it has this massive NVIDIA contract. It bought that software company called Mirantis, and it also planted new geographical flags in Europe and in Australia. So it's becoming more global. So that's one, all in a month. That's a huge amount of change in a short period of time. Two, the NVIDIA deal is a $3.4 billion contract on just 60 megawatts of power. So that's relative to the Microsoft deal. It's much fewer megawatts for much more money. It's much more condensed, basically. 3.9 million in profit per megawatt for NVIDIA versus the 800,000 per megawatt with Microsoft. And by the way, the Microsoft deal was no slouch, right? It's Microsoft, for God's sakes, right? That was their first sort of like proof of concept. So the NVIDIA deal is basically 5x that of Microsoft. So again, if you take the perspective for a second, Badge, when you're arguably the most powerful company in the world, right, in terms of like running all of AI, right, and having geopolitical consequences, and all of a sudden you're given the IREN 5 times as much as what Microsoft did, you're not a dummy at the table, right? You're doing this because you're seeing something that you need, basically, if you want to talk about it purely economically. And so the real point is that NVIDIA wanted this new site, Sweetwater, to be their flagship site for developing their new architecture. And it did the math, it did the research, and it said, basically, IREN is giving us the most confidence of being able to build our new architecture from the ground on up. It has everything we need. There is no other player on the planet that gives us this much certainty and security. This is the team we want to work with. So that's major. Okay. Point 3, and there's some debate about this, is NVIDIA also got warrants to buy up to 30 million shares of IREN at $70, which was about 15% above the price at the time. So some people said, well, these other deals it did with Nebius and CoreWeave, right, it bought equity outright. But the bullish spin on this is that what's interesting is that basically the take is that IREN said you only get these warrants, NVIDIA, if you actually deliver a massive amount of GPU chips to our factories. So basically, we could have just given you the equity up front, but no, we're going to actually make you work for it. You don't get these warrants unless you deliver the goods. So this is what I mean. Like this is like we'll scratch your back, but only if you scratch ours, and we both will win massively if both of us do our jobs, right? And so that's, I mean, you could call it depending on which way, which angle you want to take, bear or bull. But I'd buy that there's an incentive here that NVIDIA has to perform or else they don't get the warrants. So that's an interesting take. And obviously the financial engineers involved in this I could only imagine the negotiations happening at the table. But it seems to me that IREN is acting from a position of strength, especially when the counterparty is NVIDIA. So 4, right a couple of days before this deal was announced, NVIDIA bought this company called Mirantis, which has been going about their business for about 20 years. Interesting tidbit, Badge. They are only about 10 minutes from NVIDIA's headquarters. And it seems to be the case that NVIDIA itself said, in order for us to develop this architecture we need at your data center, you also need to have this software layer. And this Mirantis company has been working with NVIDIA now for many, many years. And that more or less, NVIDIA kind of said, you two guys really need, you two belong together. And the way we're going to go forward with these deals is if you basically become one entity, because that brings everything in-house. And they will allow us, NVIDIA, to do what we want to do much more securely once we can trust that everything is now vertically stacked. So there's a lot of subtleties in this. I'm not going to go in too much depth, but this purchase is kind of, my sense now is it was expedited by NVIDIA. They needed it to happen. The short version is they're kind of like an open source AI stack developer that creates the second layer of what makes cloud computing possible. So you have the software you have the cold, hard compute that IREN was building up front, but then you need the software to help bring the compute out into the cloud, and that's where Mirantis sits. So now that is an IREN subsidiary, fully owned by IREN. Also interesting side note, Badge, they received payment entirely in IREN shares. Why do that? Obviously, at the bargaining table, unless you think IREN is going, or else you'd be, diluting yourself. They got payment fully in IREN shares. So next bit is the stuff about them going global. So they're primarily a Texas company. ERCOT is the grid. They're building out the major data centers. They have smaller data centers up in Canada. But now they also bought additional megawatts in Spain, which they're going to develop, and it's also in a region that is quite renewable energy friendly. But very important is that there are all kinds of European regulations that say you cannot access your power from beyond our legal jurisdiction. So IREN basically couldn't service Europe. But now with Spain as a new hub, it can very much expand into the European domains. And obviously AI is growing in Europe as fast as it is anywhere. And secondly, Badge, they are also signaling very clearly that Australia will become a major hub in the future, because it's basically like this island that has nothing but space and sun, right? Like a pure data center future. And it does have a lot of talent in cities like Sydney. So it's starting to recruit people to basically begin the future building of that infrastructure, which will then be linked, or is already linked via cables under the sea, to places like Japan and Singapore and South Korea. And like that part of the world is going to be built out, but that's a few years out. So basically, literally, IREN is becoming a global, it's positioning itself as a global provider of compute. Cloudflare did. If you know anything about that company, they literally set up pods, physical pods all over the world that help make the internet basically better and faster. So all of this, again, happened very quickly. Here are the knocks against the earnings. They missed revenue projections massively. And the explanation essentially was that it's not a demand problem, but for some of these data centers, in order to recognize revenue, the literal flipping on the data, the switch, took a little longer than expected, because there's some burnout time that needs to happen. And we're not going to acknowledge 100, 200 million of revenue to the balance sheet when it literally didn't happen. It's going to happen, call it a couple weeks later. So to me, it's a nothing burger. But the numbers were the numbers. So that at first the algos were unhappy. There was also a slippage in terms of delay into Q3 with one of the build outs for the Microsoft site. But there were errors that were acknowledged that were engineering errors. The engineers said, we saw them, we fixed them, and now everything's going on ahead, but temporarily dip in the speed at which revenue is coming in. To me, long term, it's kind of legitimately a nothing burger, unless it becomes a pattern, in which case, the certainty with which they can deliver on time as per their reputation starts getting questioned. So where do I land with this overall, Badge? Very bullishly. They have the power, they have the land, they now have NVIDIA really all in on them as a partner. They have a new software stack. They're potentially becoming another hypercloud provider like Google, like Microsoft. It's still very early. A lot of this is about execution. So we have to keep watching every quarter, the AI ramp, the timelines, and how much of the open gigawattage does turn into deals. I'll leave you with this last little bit of breadcrumb. Based on what some analysts found the story are seeing, right now, the primary candidate to be the next contract that IREN Signs is, drumroll, most likely Anthropic. Because they recently made a massive deal with SpaceX for a data center in Memphis. They still don't have enough energy for how quickly they're growing. IREN has it on a silver platter waiting to turn on. That's the bet in the moment. And I imagine there's going to be a series of catalysts through the end of the year announcing more and more deals with some of the big players.
Yeah, very good, Krzysztof. Good summary. And I definitely think you've got a good pick here. There's a couple of like stocks in the headlines that do similar stuff, like I think Nebius and CoreWeave and maybe some others. Is there a reason you like IREN over those and why it's like it is the biggest allocation in your own portfolio?
Yeah, this is a great question because I sold out of Nebius. That was mostly to take big gains. And my genuine differentiation between the two feels to me like me going back to first principles thinking, which is the following. I truly believe that for the next 2-3 years, IREN has a land power moat. Meaning you literally cannot power on stuff if you haven't already signed all the contracts and done all the legal work with the utilities and so forth, right? That gap, however, will close. There is a lot of land on the planet, right? And companies now are obviously wise to all that. But now IREN is adding on top of that the relatively, so to speak, easier software layer. Because that, in theory, could be built on a computer, right? So they just ingested a company, integrated it, right? And now they have both the land and the software. Whereas a company like Nebius is software first. And I think deep down that what IREN has for the next 2 years is the more rare and irreplaceable, or it's harder to duplicate it than the other way around. And so, I could almost sleep well at night knowing they have the power, whereas with Nebius, or the other players, with software, one day you wake up as a SaaS owner and you're like, well, the world decided it's worth 70% less today. I'm not saying that's going to happen with Nebius, but it's a little bit more intangible to my thinking. This, of course, on the day where Nebius is up another 14% today. But, fads, I'm not calling Nebius a fad, but, and by the way, there is a great ongoing debate on X between the Nebius heads and the IREN heads. I think both will be major winners. I just like the earthiness of IREN first.
I don't know much about CoreWeave, but I think they do, they're considered NVIDIA's primary neo cloud partner. They do have a bigger pipeline commitment, 8 gigawatts, I think. Is there a reason why you've not?
Yeah, actually with them, it's more of a financial thing. They funded most of their growth badge with massive amounts of debt. And now, if you think about, potential AI bubbles bursting, which company do you want to own your portfolio? One where things are teetering and debt needs to be paid, which takes up interest payments, take up a massive amount of revenue to service that debt, versus the equity path that IREN took, which, in the short term, dilution. But if they, in bad moments, they're not going to go bankrupt. And eventually, if they do become a global powerhouse, they buy back all the shares that they had to dilute. So financially speaking, I don't feel very comfortable when that goes back to that AI bubble question. I don't think AI is a bubble, but I do think there's going to be bumpy times ahead. And I don't want to be near these precariously financed bubble stocks, so to speak.
Good. So a strong conviction from you.
So I would phrase it this way in terms of my king of the jungle portfolio. When a company like IREN gets up to what percentage is it? I think I'm around 25% at the moment. And this is because it's
21%. Yep. In King of the Jungle. Yeah.
Yeah. So that's a very, very huge allocation born on top of growth. I even trimmed it. I think I had 60 something shares. I now have 50 in that portfolio. After this kind of understanding, my conviction is there's zero reason to touch this because this is a multi-year story in the very early innings of development, and this is the golden model for how is the golden child, golden model, or this is NVIDIA. NVIDIA is not messing with podunk companies, and they back these guys in ways that are kind of unprecedented. So.
Well, anyway, thanks for getting me on board. I don't own it in King of the Jungle because it's your pick, but I do own it in my retirement portfolio. I bought it last August, and it's now a 3x for me. So that's quite healthy.
100% gain. The only real thing really in the short term might be for people who have not yet bought this stock, should they invest in it now? This is where I would put on my long-term investment hat and say, do you think AI will still be a thing in 5 years' time? If so, and even things like Australia haven't even gotten off the ground yet, right? That kind of perspectival, historic, zooming out, you'll probably be shocked at where this company is valued 3 to 5 years from now, if things go well on the execution front.
Before we wrap up today, shall we just have a very quick look at the headlines around Wise PLC, one of my long-time holdings?
Yeah, rumor has it there's some sulfuric smells coming from some regulatory agencies, which I imagine as an investor of financial companies, you don't really want to wake up to.
No, definitely not. It's pretty ugly, actually. And I know a little bit about anti-money laundering. Like I used to work in that. This is like deliver global change programs around KYC and sanction screening, payment transparency and AML for a global bank. So that is my kind of history.
By the way, KYC means know your customer.
Correct. Yeah, and the key thing there, well, we don't know actually. So let me just break the news. And it's really bad timing because Wise just relisted onto the NASDAQ, which was supposed to be like a really good, like positive news story, expose the company to a much deeper pool of investors. But straight out of the gate, they've had like two related dings from 2 different regulators. And so, they're kind of getting exposed to a bigger audience with shitty news. So that's not good. And the thing that broke overnight was Belgian prosecutors announced that they're investigating Wise over €500 million in suspicious transactions across Europe. So at the moment, this is like Europe only, doesn't involve the UK. There is a separate enforcement or action or investigation happening in the US, not directly against Wise, but against its sponsor bank. So it's domiciled, like the bank itself is like a UK bank. It's actually not even a bank, but it's like a UK financial services organization. It banks in the US through a company called Community Federal Savings Bank in New York. That's like the sponsor bank. They sort of act as the bank for Wise. Well, CFSB just a week or 2 ago got investigated because they had like automated closing of like suspicious transaction flags. So, when this is what Wise was supposed to fix. And this is why money transfers and traditional banking is so slow and so expensive and so complicated, because the regulations are really, really serious, and the enforcement when it comes carries criminal liability. Like the CEOs could go to jail if something like this, goes badly wrong, as well as getting, personally fined, potentially wiped out. This is serious stuff. So this is serious stuff. And Wise was supposed to solve the problem of moving money and making it easy because they never actually move money in their business model. They just deduct like dollars from their dollar account and pay in sterling to their sterling account, and they just make the transfers in the two countries where the money is moving, but nothing travels internationally. So that was supposed to simplify banking, and it's like the whole thesis around making money simpler. And that's really the whole Wise business model. But what it does mean is like all of this sophisticated transaction monitoring and like AML and functions detection that used to take place because you would see, over multiple days, multiple steps in the chain of a payment flowing. And then analytics could be done on that by different parties like the sending bank who does KYC on their customer. Like Krzysztof's trying to send money to Luke. Do we know who Krzysztof is? Do we know where he lives? Do we know if Krzysztof's sending me like $100,000? Where did Krzysztof get that $100,000? Is that kind of thing?
Oh, he got in the banana stand. I have a banana.
We all find it annoying. A bit of a sidebar that is interesting. That we all find it annoying these days. If you're in like a developed market, if you try and withdraw like a larger sum of money from the bank, let's say you were buying your house, and this probably happened to you, like you get asked some pretty deep personal questions, and maybe your hackles go up because your instinct is like, screw you, this is my money, why are you asking me? It's me. But it's because if you're not a good guy, and you are a good guy, but if you are not a good guy and you're like a money launderer, and you've made a load of money selling drugs or human trafficking or doing, all manner of despicable things, or you've got this cash and you want to, do something with it, maybe you want to buy a house with it, well, this is why KYC exists, to understand the flow of the money, because you're trying to stop crime. And the ultimate beneficiary of a lot of their stuff is like countries like North Korea and sanctioned countries and countries like Russia. So, it's all some global web of horror.
So, Badge, I got a basic question for you. Forgive me if I'm cutting you off mid explanation, but I read Wise's response, and as far as I could tell, it was mostly like, look, we're doing absolutely everything we can. Like, there's all these. This is a problem that everybody's trying to solve. So if something's going wrong, it's not like we're trying to do anything shady. It's just like, this is, the bad actors are sophisticated, and this is like, investigate us. Like, we're with you. We want to, I don't know how to phrase this. Like, it's believable to me that in this industry, bad stuff happens. And just because in this case, there's smoke, that the smoke might be real, but the criminal stuff would be that they deliberately did this, right? Or somehow deliberately looked the other way, or deliberately were in cahoots. But it doesn't seem a natural conclusion that they themselves were bad actors, right? Or is that too simple?
You're sort of right, but there's a gray zone. And the gray zone is like they have a load of people, which they do. Apparently a third of their headcount in Europe are compliance people. That's a lot of people. I imagine they're not all actual compliance people. Probably a bunch of them are like developers and different things working on that part of the platform. But the gray zone is, you could be spending a ton of money, but if you're doing it inefficiently and you've, come up with bad controls, and, don't forget, they have essentially like reinvented the way money travels. So all the learnings of the last 100 years of like traditional money transfer, where it's now not impossible, it happens every day, but hard for criminals to move money, money launder and do things like that and get money to sanctioned countries. Like Wise, essentially, they've kind of reinvented the way it works. So they have to kind of rebuild all of that policy checking and compliance. And if they haven't done it well, they're still accountable. They could, the chairman or the CEO, Krzysztof, could still go to jail because they haven't, because it's the outcome that's important. Like if they have been found to have facilitated €500 million in illegal money flows because of their incompetence, let's just sort of frame it that way, even though they didn't mean to do it. Like, you still facilitated crime, right? You're still liable.
Right. Okay. So that answers my question, because I was on the news. I was looking like, this is probably an overreaction of the market, and this would probably be a great entry point to pick up some chairs on the cheap. And then, your sort of caution that, no, this is as serious a potential violation as there is. You don't want to get ahead because this could go to zero, right? Maybe that's being over dramatic, but in either way, if there's any bit of culpability here, this is bad, bad, bad. So you don't want to be, I think, as an investor, trying to catch a falling knife potentially on hope that it's all good and above water.
The stock was down 15-18% at some point today. Like, we're recording on the day the news was released, 1st of June, but it's at the time of recording, it's only down about 6 or 7%, I think. So it's kind of recovered back a lot. I'm actually surprised it's recovered back so much, and it might be because a lot of investors kind of took your sort of first level thinking, oh, this is like a great company. They'll deal with this. They're being open, transparent. They'll get through it. It could be very serious. Like, if I think about a potential bear case for my investment, because this is now like a hot potato right now in my own portfolio as of a few hours ago. Like, they've got significant spend on compliance, which is good, check, but their processes are not good enough and the outcomes are not good enough. So what does that mean? They either have to make a massive investment into technology or recruit even more people, and it's a big number already, so that they can comply. And they have to comply. There's no choice. You can't continue to take, losses. You'll go to prison. It's not just like a civil thing. So this could be very serious for the company. Like, at the worst case, or the worst case is they lose their banking licenses and they get shut down. That is a possible outcome. Unlikely, I think. But another bad case might be they just get told, like, your model of moving money in this way is not enforceable. Like, it's not possible. You've tried for years and you've had like 3 AML failures, 2 in the last few weeks. But there was another one where they settled in the US in July 2025, and it was a similar kind of AML action against Wise. So they got a history of like anti-money laundering failures. And so the regulators could well say, like, they'll open the case with the UK, like the FCA, which is where like Wise is the home market. The FCA will do their own investigation, and the FCA could literally shut the company down. But or the FCA could say, well, you have 12 months to revert this business model you're running, because it's unenforceable, and you have to do it the traditional way with correspondent banks, because we've proven over the last 100 years that we can, track illegal funds with that sort of chain. Or they'll get forced to spend even more money on top of like a high base, and that's just going to wreck like operating margins and things like that.
So this is fascinating, just to bring it like to the actual, this is the hand we're dealing with at the poker table. Do you buy Wise today, knowing what you know?
No, 100% not. I'm thinking about selling. Yeah.
That was going to be my next question, because I actually thought I might not catch you in a bind, but I was like, I probably doubt that Luke would want to sell, but if you wouldn't want to buy today, then but so yeah, logically you would sell, right? And then buy back once the smoke clears, right? At a higher price, but.
Sure. Yeah. Potentially. And I may well do that. Like, I haven't had enough time to think about this today, and it's hot off the press. So this is actually helpful, pitching a segment, because it helps me clarify my own thinking a little bit. But this is my main task for this week now, apart from preparing for my wife's birthday, to figure out, should I perhaps get out of my Wise position entirely, but almost certainly like trim it back until the dust settles and we kind of know where we are.
Well, that's useful. I hope it's useful to our listenership. Before we close, let's thank Fiscal AI, our essential stock research platform. Luke and I literally use it every day. It's our one-stop shop for stock research, offering up to 20 years of global financial data, the largest company-specific segment and KPI data set. They're just getting better all the time. Now they have the portfolio import function, which has been absolutely wonderful for me. For complete financial data, Badge, use our link fiscal.ai/wildlife for 2 free weeks of Fiscal Pro, no credit card needed, and a 15% discount if you upgrade. That's fiscal.ai/wildlife. Stop being a chimp and get yourself to the professional leagues. And also join our Patreon if you haven't yet. Lots of good stuff happening on there, besides more than just monkey versus Samantha Rabbit AI shenanigans.
And actually, a shout out to, or a call out to our existing Patreons. Like, let's try, I know, like, the actual community chat, like, the facilities on Patreon are not the best. And we do want to move to Discord one day, but I think today's not the day. What we want to see, I think, before we make that decision is, like, so much communication that we're all kind of buried. So Krzysztof and I read every message in every group, every reply. And we're always, like, I'm often sitting bored on the sofa. I'm not allowed to go in sunlight at the moment because I'm taking, like, some weird high-dose antibiotics for my mortal illness. So I'm sat in the gloom waiting for Patreon to comment so I can, like, dive in and reply to something. So, like, get in there and hit us with your questions or debate each other. Like, and one of our newer Patreons, Jason, posted some quite controversial stuff a day or two ago. So there's been some, like, debate around that. Yeah. Share your thoughts.
It's a jungle out there. Badge, you ready to be a beast and investor?
An ill, sick beast. Like,
No roar this week.
no more from me. Until next time.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.